Many of you listeners have been curious to learn what exactly you can do on your behalf to mitigate the effects of climate change. So far, we've talked about doing your part in advocating for climate reform and consuming more public tap water, as talked about in episode 2. But what exactly can you do to make a direct impact? In today's climate conversation, we'll be talking about what it actually means to be investing your cents in climate defense, as I always say. So grab your headphones, settle in, and let's dive into the world of sustainable investing. Welcome to Sustainable Sense, where we invest in climate defense. You're in for our hot take on all things money, markets, and the environment. We've talked about various ways to contribute to climate reform, but did you know that your investments can make a significant difference too? One of the best ways to help support the green movement without leaving the comfort of your sofa is to invest in green companies. Investing and buying stocks can be a powerful tool to tackle climate change head on. Green and sustainable investing is all about putting your money where your values are. In your everyday choices, you always pick what you think will have the best outcome, right? By actively seeking out companies that prioritize environmental sustainability and climate action, investors can play a crucial role in driving the transition to a low carbon economy. So let's get into it. What exactly can you do to make an active difference? Remember that third grade energy project? Well, I'm sure you know what renewable energy is then. One option is investing in renewable energy companies that focus on wind, solar, or hydroelectric power. These companies are leading the change toward cleaner energy sources. Okay, hold on. We've said the word investing like a billion times by now. So, what exactly is it? As defined by Merriam-Webster, our old friend, an investment is
the outlay of money usually for income or profit, capital outlay, also the sum invested or the property purchased.
Okay, I don't think that really helped. Investing means using your money in a smart way to help it grow over time, while also helping the company you're investing in. Think of investing like planting a seed. When you invest money, it's like planting a tiny seed in the ground. As time goes by, that seed grows into a strong and healthy tree. Similarly, your investment has the potential to grow and become more valuable over time. Just as trees provide shade, beauty, and maybe even fruit, your investment can provide you with financial benefits and rewards if nurtured wisely. Investing is a win-win for both you and the company, and in our case, the environment, if and only if you invest in the right companies. There are so many investment methods like bonds, mutual funds, EFTs, real estate investment trusts, CDs, and cryptocurrencies, but one of the most popular types of investment is stocks. If you're interested, go check out our mini-series Part 1 for more info about stocks. When you buy stocks, you're actually buying a small piece of a company. If you think about it, it's pretty cool. If the company does well and more people want to buy its stock, the price can go up, and that means the value of your shares will increase, and you can sell them for a higher price to make profit. So by investing in the right companies, we can help progress action towards noble causes and also get some return on our investment if all goes well. See, that wasn't so bad. Investing in companies that develop innovative solutions to combat climate change can have a significant impact. All of the technological investments today in companies like Apple and Tesla have been in part due to shareholders' investment in them. So clearly, you can make a difference through investment. It just takes time and a collective effort. Just like that week-old homework assignment you should probably be getting to sometime soon. Now, if you'd like to make a real difference, try impact investing. It involves allocating capital to companies, organizations, or funds that generate positive social and environmental impacts alongside financial returns. For instance, you can support clean energy products, sustainable agriculture, and initiatives that address social and environmental justice. So it's not just about financial returns, but also making a positive impact on the world. Impact investing is one of the best ways you as an individual can make a difference without even leaving the comfort of your own home. Let me be real for a sec. Many of us are too ingrained in habit to actually get up and ignite action, and that's understandable. If there's no incentive, many of us are not willing to do anything. So, impact investing may be the perfect fit for you. Purchasing shares of sustainable and ethical companies and encouraging others to do the same is the push we need to get change making. By owning shares of these types of companies, you're providing the capital needed to make adequate action in passions that you believe in. Here, let me save you some time and I'll let you in on who's good and who's bad. So who do you want to invest or purchase shares from? So first up, we got NextEra Energy, one of the largest renewable energy companies in the world, specializing in wind and solar energy. Next, I'm sure you know everyone's favorite, Tesla. Known for its electric vehicles and sustainable energy solutions, Tesla has been at the forefront of the EV revolution. And if you're into clothing and design, you should consider Patagonia. Patagonia is a renowned outdoor clothing and gear company that emphasizes sustainability, ethical sourcing, and environmental activism. And I'm sure you've seen this one on the news. Beyond Meat, a pioneer in plant based meat alternatives, offering sustainable and environmentally friendly alternatives to traditional meat products. It's got the same taste with less emissions, so I say it's a win win. Another good sustainable investment is Schneider Electric, a global leader in energy management and automation, providing solutions for efficient energy use in buildings, data centers, and industry. And last but not least, we have Alphabet or Google. While primarily known for its technology services, Google's parent company Alphabet has made significant investments in renewable energy and sustainability initiatives. Now, be warned, there are many famous companies that many people invest in that have very unethical and unsustainable practices. In this case, you should make a divestment, which means getting rid of all investments tied to unsustainable or unethical companies. Let's go back to the tree analogy. Imagine your investments as a big leafy tree. Each investment is like a branch on that tree, representing a company you've invested in. But what if you discover that some of those branches are not so healthy? They might be causing harm to the environment or engaging in practices you don't agree with. That's where divestment comes in. It's like carefully pruning those unhealthy branches from your investment tree. By divesting, you're removing your support to companies that don't align with your values. So be warned, many of your favorite brands engage in many harmful practices that you may not be aware of. For example, BP, a fossil fuel giant, I mean, that's already bad, but it gets even worse. Rebranded as Beyond Petroleum, showcased solar panels on its gas stations. However, environmental groups accused BP of misleading the public, as the majority of its spending still focused on oil and gas production. Next, ExxonMobil, another oil giant, faced criticism for its history of environmental damage, including a massive oil spill in 1989. The company was also accused of deceptive advertising, promoting experimental biofuels while lacking concrete targets for reducing emissions. Yes, I know we all love our cookies, but Nestle, the largest food and beverage company globally, received backlash for vague ambitions regarding recyclable packaging without clear targets or timelines. The company was named one of the top plastic polluters, contributing to the plastic waste crisis. On top of this, Nestle has been accused of practicing child labor in their supply chains. If I were you, I wouldn't be caught investing here. I know it's pumpkin spice season and all, but Starbucks isn't all that it's chalked up to be. Starbucks introduced a strawless lid as part of its sustainability drive, but critics pointed out that the lid contained more plastic than the previous lid and straw combination. Concerns were raised about the low recycling rates and the practice of exporting recycling to developing countries. For you fashion folks out there, beware. Fast fashion brands such as H&M, Zara, and even Uniqlo have been caught greenwashing, which is promoting limited sustainability initiatives while contributing to extensive textile waste. It's a rapid cycle of creating, consuming, and wasting. H&M's Conscious line, marketed as sustainable, faced criticism for lacking sufficient transparency and environmental benefits. These examples highlight the practice of greenwashing, wherein companies engage in deceptive marketing to appear environmentally friendly while often perpetuating harmful practices. Divestment campaigns have gained momentum worldwide. They encourage investors to redirect their money away from fossil fuels and toward cleaner energy alternatives, thereby accelerating the transition to a sustainable future. Just remember that investing involves risk, and it's important to conduct thorough research and analysis before making any investment decisions. Consider factors such as the company's financial performance, long term sustainability goals, competitive position, and overall market conditions. As you know, I'm not a registered financial consultant or anything, so make sure to do your research first. It can also be beneficial to consult with a financial advisor who specializes in sustainable investing to tailor your investment portfolio to your goals and values. Don't worry, if you're a kid or teen out there, you can still invest too. So, what exactly can you do? There's something called stock slices. Stock slices, also known as fractional shares, allow kids to invest smaller amounts in individual company stocks. Then, custodial accounts, managed by parents or guardians, provide a way for young investors to engage in stocks, ETFs, and mutual funds. Robo-advisors, not ChatGPT, offer automated investment solutions with options suitable for youth. Hey, do you or your teen have a job? Teens with earned income might qualify for a Roth IRA, while index funds and dividend reinvestment plans provide diversified exposure. It's vital to research the investment options, understand risk, and involve a trusted adult when starting on the investment journey. Congrats, you're now a shareholder. So, as a shareholder, you can be influential to a company's decisions. There's a thing called proxy voting and shareholder advocacy. This is where shareholders can use their influence to drive change. Proxy voting and shareholder advocacy give you the power to shape corporate decisions. Voting and pushing for climate related resolutions, increased disclosure on carbon emissions, renewable energy targets, and improved supply chain sustainability are impactful ways to drive change. So, in the words of Mahatma Gandhi, you can be the change you wish to see in the world. So, apart from investing in companies, there are other financial products to consider. Green bonds, for example, are debt instruments that specifically fund projects with environmental benefits. By investing in green bonds, you can directly finance climate friendly projects and contribute to a greener future. And that's it. Well, not really. The world of investing is endless, and there's always more to explore because the market is constantly changing each day. Remember, this may all seem a little bit overwhelming at first, but sustainable investing requires research, seeking professional advice, and being aware of greenwashing. Just be careful when you make your money decisions, but also don't be afraid to go for it. If there's anything you should take away from this episode, you have the power to make a real impact on the world. And I'm not trying to sugarcoat it or anything, you actually have the power. By investing in sustainable companies, you become part of a movement that's driving positive change for the planet and future generations. But it's not just about making difference here, it's also about securing your own future. Sustainable companies are often at the forefront of innovation, positioning themselves for long term success in a rapidly changing world. By investing in these companies now, you're not only supporting their mission, but also positioning yourself for financial growth down the road. It's a win win situation. Plus, you have time on your side, especially as a young adult. Investing early allows you to benefit from the power of compounding returns, which can multiply your investment over time. So take those few minutes, do your research, and make a conscious decision to invest in sustainable companies. Your actions today can shape a better tomorrow for both you and the planet. Start now and let your investments become a force of positive change. And that's a wrap for today's episode of Sustainable Sense. Join us next time for more engaging discussions on tackling climate change, and stay tuned for some interviews in the near future. Make sure to follow us on Instagram at Sustainable Sense Podcast, and if you have any questions, feel free to email us at sustainablesensepodcast@gmail.com. Again, that's sustainablesensepodcast@gmail.com. And as always, invest your sense in climate defense.